The primary reasons on why I thought that you should pay off your house in my previous video are 1. Because of stock market fluctuations. 2. Because it reduces your fixed expenses. 3. Because it allows you to take on a more aggressive asset allocation with your other investments. And 4. Because homes are generally a hedge against inflation. Hello everyone, my name is Zach and welcome to On Cashflow, where I help you become a master of your own cash flow. Now let's get started. First thing that I want to talk about here is being offensive versus being defensive. So you probably know those two terms from sports, but did you know that you can be offensive and defensive when it comes to your personal finances? Paying off your home would be considered a defensive move. It is something that is more conservative. It is a move that has more to do with reducing your expenses than it does with increasing your income or increasing your net worth. And if you want to grow your wealth in the long run and you want to protect your wealth along the way, then you're probably going to have to play offense and defense at the same time in different areas of your financial life. But here are some other possible defensive strategies for protecting your wealth. The first big one has to do with insurance. The reason why we generally are going to be purchasing insurance is so that some kind of unlikely event does not wipe out our entire net worth or cause us to go bankrupt. We buy liability insurance when we're driving our cars around. The same thing when it comes to your home. If you lost your home in an unlikely event, most people would go bankrupt or would have a financial hardship if they lost their home in some kind of unlikely event. Some of us even purchase insurance on top of our existing liability insurance. We like to call that umbrella insurance, just as a small little extra just in case insurance to protect our wealth. Another good example would be health insurance. For the most part, the reason why we have health insurance is so that some very expensive medical procedure or medical emergency does not cause us to go bankrupt. And by purchasing insurance, you are defensively protecting your wealth from unlikely or catastrophic events. Another defensive tactic when it comes to your personal finances is an emergency fund. And the reason for that is to protect your other investments or protect your other savings from having to use them in case you come up with a financial emergency. If you have a few $1,000s that you have to pay suddenly, if you have emergency savings already in place, then it's not going to do much harm to you financially. It exists there for that sole reason, and that is a defensive tactic. Another one would be simply paying off debt that you have. That is a defensive strategy. You are not going to be increasing your investments in that circumstance. You are simply going to be decreasing your interest expense because usually when you have debt, you have interest on top of that debt. And so you are decreasing that. You are taking a defensive move by paying off debt. One last defensive tactic when it comes to your personal finances that I want to share is just generally being frugal. Frugality is a defensive tactic because the act of being frugal is reducing your expenses or being aware of where your spending is going. And that is a defensive tactic when it comes to your personal finances. All of these defensive tactics I personally use in my own life. For example, I have car liability insurance. I have home insurance. I have medical insurance. I have an emergency fund. And generally, I approach life with a frugality mindset. I'm pretty frugal compared to the average person. And all of these defensive tactics have served me well in protecting and growing my wealth over time. This is sort of a part 2 to another video that I did previously. And I listed out those reasons on why I think you should pay off your house if you want early retirement. And in that previous video that I made, I explored those 4 primary reasons. If you're interested in that other video that I made, I'm going to talk about it more at the end of this video. But first, let's get on to another reason why you should possibly pay off your home if you want early retirement, or just if you're entering regular retirement. And that is the interest expense associated with carrying a mortgage. This factor of interest expense is actually more relevant now as I'm making this video than it was in the previous video that I made. And that's because since that previous video, interest rates have dramatically risen. And what that means is that having a mortgage is much more expensive. Whereas in the past, you might have had a mortgage with a 3% interest rate. Now, it's not uncommon to get a mortgage with an 8% interest rate. Even if you were getting the best rate possible today at just 7%, look at the difference between having a 3% mortgage and having a 7% mortgage. Your monthly mortgage payment is quite dramatically different, much larger with that 7% interest payment. And that means that if you are actually holding that mortgage for 30 years for the complete term of the mortgage, then your interest expense with a 7% interest rate is going to be extremely high. Just take a look at this. So that means that if you do have a mortgage with what would be considered a higher interest rate, you can save a lot of money over time by paying it off early. Next, I have another good reason on why you should pay off your house early, but no one really talks about this one. But before I move on to that one, I just want to say really quick that I put a lot of heart, research, and effort into these videos. And if you're liking this video, please make sure you hit the like button on this video. It really does help me out, and I would really appreciate that. Thank you very much. All right, now getting on to the next reason. If you have a paid off house, it's easy for you to just open up a HELOC, a home equity line of credit. Now, why would you want to open up a home equity line of credit? You just paid off your mortgage. You are now debt-free, so why would you want this debt? Well, that's because a HELOC is different than just having a regular mortgage. A HELOC is exactly what it sounds like, a line of credit. It doesn't mean that you actually have to be using that debt. Just like if you have a credit card, it doesn't mean that you have to have a balance on your credit card. You can just have that line of credit available for your use, but you don't necessarily have to have a balance on it. It is similar when it comes to a HELOC, but instead it is based on the equity that you have in your home. And if you have a paid off home, then you have pretty much 100% equity in your home. And the reason why you might want to have a HELOC on your paid off home is several reasons actually. The first one being that a HELOC can kind of be just like a just in case emergency fund. So it can be beyond your regular cash emergency fund savings. You can have a HELOC, which is basically that line of credit available, and the interest rate is going to be a lot lower than it would be if you are paying for an emergency with a credit card. So you could possibly use that line of credit as an emergency. Like if you needed to access a relatively large amount of money within a, let's say, 1 week time period. And it's much easier to qualify for a HELOC if you have a lower debt to income ratio. And if you have no mortgage, you're probably not going to have any other debt as well. That means you're going to have a very low debt to income ratio. And that means you're probably going to easily qualify to have this HELOC and therefore have this extra emergency fund available to you. But not only that, there's another reason why you might want to have a HELOC, even if you have a paid off home, like no mortgage. And that's because a HELOC actually does put a lien against your home. And when there's a lien against your home, usually it can serve as kind of a deterrent to someone trying to bring a lawsuit against you because they see that you have a paid off home. Therefore, you have, all this equity that's available for a lawsuit. So it kind of acts as a deterrent because they see that there's a lien against a home. So it could possibly act as a little bit of asset protection there. This is the route or route, depending on how you pronounce it, that I went with my own home. So I purchased my house without a mortgage. Then later on, I got a HELOC on the house so that I have that line of credit available and that little bit of asset protection. And I think it's a pretty good idea for most early retirees or even just regular retirees. And now I saved the best reason for last. But before I get onto that reason, this leads me to the big question here. I want to know from you in the comments below. When it comes to your own retirement, your own early retirement, what is your plan when it comes to having a mortgage? Do you plan on having a mortgage entering retirement, not having a mortgage entering retirement? Does it matter on what your interest rate is? Does it matter on what the balance of the loan is? Please let me know in the comments below. I'm really curious to hear what you have to say. Perhaps the best reason why you should pay off your mortgage if you want early retirement or regular retirement, and that is nothing to do with finances, peace of mind. Yes, seriously, to live somewhere. And it might as well be yours, right? You might as well own the home that you're going to live in. Most people do want to be homeowners. It's not for everyone. Not everyone wants to do it. And it just depends on your living circumstance. But most people probably want to be homeowners at the end of the day. It might as well be as close to being yours as possible. And that means not having a mortgage. And this comes with lots of peace of mind. And sometimes peace of mind is worth more than an increase in your net worth. And that's because personal finance is more than just math. It's more than just statistics. It's more than just growing your net worth to the highest that could possibly be. It is personal, not just finance. And a lot of us can gain a lot of peace of mind, can get a lot of clarity in our lives if we don't have large fixed expenses such as a mortgage, especially when we enter retirement and we don't necessarily have that steady high income paycheck that's coming in every 2 weeks. When you're living off of your investments, when you're living off of your retirement assets, it can be a lot different. It can feel a lot different. Even if you think the math is going to work out in the long run, it still feels a lot different if you still have that large fixed expense. So it can create a lot of peace of mind for you by having that mortgage paid off. And this is perhaps one of the biggest reasons why I chose to pay cash for the house that I'm living in now. And that's because it allowed me to enter early retirement to try out financial independence while living off of my investments and not necessarily living off a steady paycheck. And it felt a lot better to sleep at night knowing that I didn't have that fixed monthly mortgage payment. And if you're not convinced yet, I did make another video, like I said previously, on why you should pay off your mortgage. And I definitely think that you should check out that video as well. Okay, that video is going to pop up on the screen and I'll put a link in the comments below as well. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time. Most people would go bankrupt or have extremely hard financial hardships, or would have a financial hardship.